let's talk about what a counter bar reversal actually is. All right. It involves two candles that are going to occur near the 20 or the 50 period moving average. Either one will work. You're going to go with the direction of the market for this. So if the market is starting to trend downward or trending downward, if it's reversing to the downside, you're looking for downside moves. If the market is, right, triggering upside moves, and you go for the upside move. Now, one of the first things I want to point out is I have the 20 and the 50 period moving average on my chart here. You can keep it really simple. When the 20 is above the 50, look for bullish setups, right? At the moving average. Okay. When the 20 is below the 50, look for bearish setups at the moving average, right? Obviously, if you're away from the moving average, you can look for mean reversion plays. That's perfectly fine from here to here, from here to here. Mean reversion is perfectly fine, but at the average, if you are 20 over 50, look for bullish setups, right? At the average, if you're 20 below the 50, look for bearish setups. So let's start with where we are right now here and what led to what we had today. Or what led to what we had leading into today. So how I play this out. So you're looking for trigger bars. That's the first component, right? The bar that actually gives you the trigger. So that actually triggers your, your setup, right? So when I say the trigger, that actually triggers your setup. So let's say you're looking at a pullback, like right here, right? So the market drops, then you get a pullback to the 20 period moving average. Now, once you actually get there, you start to see bars like this, right? Like this, right? These are bars that we look at as the triggers. They trigger the setup, right? They're the ones that actually, like, the center of gravity is around the 20 period moving average or the 50 period moving average, right? The center of gravity is in that area. Okay, so you can see that, right? Now, from there, you're looking for what we call a counter bar reversal, and that gets triggered by the signal candle, right? So you had this one right here. This could have been so this was a trigger right here. All right, this trigger just set up. Look at that. Look at that. You can just see the center of gravity just sitting right there at the averages. Then all of a sudden, boom, right? You take that bar out with a bearish bar here, right? Once you break the lows of that, and for those that are a break and close kind of individual, once you break and close below that bar, you're good to go. From that point on, yes, you saw this, little spike above there when it was all said and done, but pretty much your flow has been to the downside ever since this signal took out this trigger right here. All right. But let's say you caught it a little bit late or whatever the case may be, right? This ends up being a signal bar as well. And again, you can see the center of gravity is right around these averages. I'm going to actually do some math here, right? Let's calculate the pivot point for that particular candle, right? And that's the high, the low, and the close divided by 3. Wow. Now let's see here. So the high of the candle was 188.88. The low was 181.41. And the close was 183.22. Divide that by 3. I want you to add them together. So the actual center of gravity for that candle, the pivot point for that candle is 184.50. Right? Look at your 20 period moving average at that time. Right? 184.97, 185.40 is the 50 period moving average. Right? 185.26 is the 20 period moving average on the next day. And right, 184.82. So your pivot point for this particular, right, for that trigger is right around the moving average, right? It's right there. So what we want to do is we use this as a trigger now, right? But again, once you actually crack that low, so this first day did not crack the low, but the second day did. And this would have been your entry for your counter bar reversal. All right. And from there, all right, boom, you had you a nice downside move. This is something that is repeatable. You can do this on a regular basis. The only thing that cancels a counter bar reversal, so you could actually still be in this trade if you wanted to be. Me being me, I would have gotten out once we hit the two almost 3 standard deviations to the downside from here. But one of the things that can cancel this is if you finally close above the high of the low day. Once you finally close above the high of the lowest day, it's time to get out. All right. The chart, you have to go to the stream, Denise. The chart is there. All right. So now from there, you actually would need to look for the bullish setup here. So when you look around this area right here, you can see clearly that this candle right here sets its center of gravity right around. This candle right here sets its center of gravity right around the 20 and the 50 period moving average. So once we take this candle out right here, right, we can move these out the way for now. Come back to that. Right. Once we take this candle out right here, which we did right here at this point right here, right? We did right here, and then boom. From there, you actually end up with a nice spike to the upside, and that is your counter bar reversal. Again, the only thing that actually takes that out is when you take out, in this particular case, the low of the high day. All right. And of course, you can use your trailing stop, right? Closing below the low of the high day is what actually cancels it out, right? But always have your stop losses in place. Always have your maximum losses in place and let that be what it is, all right? We like to make these contents, short and rich in value. So that's it for this particular one here.